Telkom Business, behind South African businesses' drive to thrive.
Welcome to the Entrepreneurial SME. I am Rams Mabote. This week, we're exploring cross-border payments for SMEs and how they help stimulate international trade. My guest is co-founder and chief technology officer of VertoFX, Anthony Oduwole. And Anthony is joining me from far from here, but very significant. Anthony, good evening, and thank you very much for joining us. How big is cross-border settlement payments in SME sector as opposed to the big sector in business?
Yeah, thanks for having me today. Cross-border payment is very, very big because, especially in Africa, because a lot of businesses today, we are used to either importing or exporting goods and services across the border. Yeah. And when you are obviously doing that kind of activities, there's always a need for you to make a payment. So cross-border payment has been growing, especially for the B2B, about 20% year on year for the last 10 years. I believe in 2018, the market was around $400 billion in Africa alone. And that's not including credit payments or anything like that, just some pure B2B payments. And if you include those increasing every year, I don't think it's that far from $1 trillion, and that's on B2B. And most of these B2B payments are SMEs as well. So it's not like large corporates are making those payments. It's mostly from small businesses, medium enterprises that are doing that kind of transaction.
Those stats leave me rather cold because, South Africa is the second largest economy in the continent, but unlike Nigeria, Ghana, Rwanda, and Kenya, we're not considered to be a market for cross-border payments. Why would that be the case?
Yeah, I think for a long time, obviously, the South African rand as a currency on the continent has been very stable. I think is the only currency that is listed on most other European exchanges. So what that means is that it's a lot easier for South African rand to be converted to other currencies, i.e. to US dollars, euro, or UK English pounds. But recently, obviously, there's been some devaluation or volatility in the market, which means that if you don't manage your risk properly, it can be very expensive the time that you need to do your cross-border payments, because market has moved a lot and it's a lot difficult nowadays to get the right pricing and so on. So I would say recently, because of that changing in exchange and the volatility in the market, it means that businesses that are used to paying across the border, they're starting to feel the pain of obviously the difference in pricing when it comes to exchanging from rand to, let's say, dollars.
I would have assumed, and you'll correct me, that could it be that South Africa does not trade a lot in the continent, but rather it trades in the global north and the west?
I would say yes and no. I mean, there's a lot of wine shore companies that out of South Africa that actually sell into Europe, for example. So there's a lot of export that always been going to European countries and US in the past. So I wouldn't say they weren't trading before, but I would say nowadays the world is homogeneous in a way. So everyone is quite connected. There's internet everywhere. People that don't used to be online are now online. So there's a lot of international trades that are happening even in South Africa today. Maybe in the past, most of the consumers are within the country, so there's never the need for you to do cross-border payments. But nowadays, you have people buying from Nigeria, from Ghana, or selling to South Africa, and so on. And that ultimately is what's creating the huge demand and the increase in cross-border payments.
Cross-border currency trading can be very expensive, right? There are costs that come with it, and sometimes it can be very discouraging to those who want to do business across borders. How much of an impediment is this of the cost that people have to pay on the currencies that they exchange?
Yeah, I mean, as a business, you always have to be smarter with how you run your business in general. So most of the fees are coming from fees that are being included in the exchanges. So for example, you go to your bank, you try to change your rand to, let's say, US dollars. The bank has to make money. Then you ask the bank, can you help me make a payment to my suppliers in another country? The receiving bank has to make money. So along the journey, everyone is charging something. And that obviously means that the cost for you to do that exchange is more expensive than maybe it used to be. This is why company like us is in the market. What we try to do is to remove those pain points from customer, because some of those fees, they don't need to be that expensive. It's just the way the banks have been run. And in a way, if you're a small SME, the bank don't really care about SMEs compared to the large corporates. Therefore, they don't care whether they're charging you more or not.
I was actually going to get to that. So using companies like VertoFX, not only does it help me with the onerous stuff that you've mentioned, but also it takes away the burden from me to handle things that are not part of my business, right?
Exactly. I mean, there's a lot of challenges to do what we do. Like you're talking about the compliance and regulation aspects as well, because what you don't want to do is to decide to send money to somewhere and suddenly you are not compliant with the local regulations. That's not the core business for most of this SME. Also, to find liquidity, where do you find the right liquidity? When's the right time to trade? What's the risk management solution in place? All of those stuff are not what normal businesses want to see or want to think about. And that's where someone like us in the middle, we say, we will take all those challenges, all those pain points. We give you a simple app for you to use and ensuring that whatever you do with us is compliant with your local jurisdiction. Therefore, you can just focus on your business.
Anthony, we're going to take a short break. When we come back, we continue this conversation.